All right. Hey, so welcome to our little podcast here. Joe and I haven't done a market talk and chat in a minute, and we're just kind of shooting the breeze. I'm like, Joe, let's record this, man.
Yeah.
And just talk about the things we're talking about. I did post today on my Instagram story. I don't know if I'll turn it into like a full post, but a lot of concern about what's happening with interest rates. So we're kind of talking about it, explaining it to you. So those that don't know, Joe's out of state. He was in Los Angeles for years and he found a great deal, as many people have, to buy a property. I call it a farm, and like
Yeah,
an
that's a
area
stretch.
for 200K. He's got like an acre or 5 or 20, whatever he has out there, and he's out there
Couple
with
chick
his
couple chickens.
chickens, horses.
Yeah,
Basically like he in the morning he wakes up at 0400 and he's herding cattle. He was
exactly.
so inspired by Yellowstone that he's like, I just want to buy a farm, bro. And
Yeah, simple life, man. The Nusker Ranch.
here he is. Yeah, and what do you call it, by the way? Is it the Yellowstone? What do you call it out there?
The Yellowstone?
No, what do you call your ranch, bro?
I just call it the good old Nuska homestead.
There you go, the homestead. I love it. So that being said, we're talking about expenses, and he was just out here when I was helping with my church's Bible camp, and we messed that one up, by the way. I'm just gonna be honest and publicly apologize. He asked for days off. He's to be working in the office as he is out here visiting family, and it was the same week at TVBS, which is our church's Bible camp, and so basically I was leading a good portion of it, and we had like
Mhm.
close to 600 kids, and you're coming out here and thinking I was going to work, but I mixed up the dates and weeks, so you ended up being on a quasi vacation. You're supposed to ask for PTO, and we got you for that, of course. But
Eh, Thank
yeah,
you.
thank you, bro. I felt so bad. They went to Las Vegas, and we were just talking about the cost of things and how this conversation brought up. So it came just to
Yeah.
mind. And so you did that, and we're talking about what's going on with inflation. And the reason why this, and bring it all home and not to just bunny trail, but bring it back to like the main fire road, if you will, back to the main point and get out of the weeds a little bit, is we're looking at inflation, what's going on with interest rates. We did have a lot of hope again. Um, we had a dip in September, before in August. We saw it jump up in October with jobs numbers that came out, some inflationary numbers. And to explain people that don't understand interest rates are predicated upon what's going on in the bond market. Mortgage rates is a 30-year bond. This can be based off of the bond market. So we watch mortgage-backed securities for interest rates, but that also tends to follow what we look at in inflationary reports and inflationary pressure. So we look at the bond market, what's going on with bonds and the treasuries. So that brings us to a point in March, I believe, when the new Fed, or not the Fed, pardon, the new Secretary Treasury was appointed over the weekend. He was very, I would say, really, they said bullish, but the idea is bearish, where they're going to push pressure down. Remember, the bull pushes up, the bear pushes down into those markets. But he was very optimistic, perhaps is a better way to say it, for where inflationary pressure should be, where his hopes are for treasuries, where his hopes are for inflation, where his hope is for, of course, the big real estate guy, as far as interest rates go for mortgages. That being said, we saw a dip. We saw the 10-year treasury drop to like four, from like 4.4, 4.5. And I took my family to Oxnard for a little surf vacation for about a week. And I remember barbecuing with my wife and my daughters. And I was just checking futures on my phone. And I remember texting Joe, poor Joe, out of state, out of area, out of time zone. And I'm like, bro, get ready tomorrow. Treasuries are at 3.86. Sent him a screenshot from the Market Watch. And So, okay, cool. I'm ready. We already did
Yeah.
17 of these bad boys. And we're
I was
like
ready, dude.
emojing back and forth. We're just like pumped, like, oh, bro, we're going to get busy, right? And because it's been a hard year for those that don't know in
Yeah.
real
I
estate.
had I had Dolly Parton 9 to 5 ready to go. My morning coffee. I was ready to go, man. I was ready to go.
Yeah. But then, we found out that on the country note, beer is good. No, God is good. Beer is good. God is great. People are crazy. And that was crazy because really what was pushing this was it was we saw the markets reflect off of headlines. It
Yep.
was pure headlines. The tariff news then came after. And then we saw Treasury go from literally Sunday night 3.85, 3.86, thinking we're going to look at interest rates for 30-year fixed mortgages, low 6% range, FHA, VA in the mid fives to low fives. Turn around and rates just went back to where they are, and it's traveling between 6.5% to 7%. 10-year Treasury went back from 3.86 that night to 4.35, 4.4 the next morning. There's nothing we could have done in that time. It's just a swing. The market didn't have time to react for mortgage rates, those who are wondering. But we're talking about this morning inflationary pressure and tariffs. And what's funny about tariffs is, I don't know if you saw the news, Joe, but it basically there's a surplus in the treasury of funds that we were getting actually through the tariffs that were essentially working.
Right.
So it
I
goes to
did hear
say,
about that. Yeah.
right? So we're starting to see that. We're starting to see inflation come down. But we saw a CPI report come out, which is a consumer price index, was a measure of inflation, again, which can affect bonds, interest rates, what have you, at 2.7. And they're blaming tariffs. But what a lot of people are pointing the figure to is Jerome Powell and what he's doing. And we're just going a comparison state by state, where you are, where I am, especially here in Gavin Newsom's California. Let's just call it that, not to be politically driven, but with the things that he's doing with EPA, refinery shutdowns, we're seeing a new gas tax that was put in effect on January 2nd, which may be the reason why we're seeing 50 to 60% more cost per gallon for gas prices. We're seeing inflationary pressure really pushing and kind of affecting people here within the state, but nationwide. And it goes back to, again, that main point we're talking about Jerome Powell. He's not politically driven. I don't care what big bad orange man says. It's just true when you see inflationary reports getting better. And back in 21 and 22, when we saw the inflation or CPI get up to 9%, 9.2 during the previous administration, super high. Highest has been in 40 some odd years, back to where it was in the early 80s with the Carter administration. But when we see that, we start to realize that, okay, we came down from there. His goal then was getting the CPI, the consumer price, which is a headline number, below 2.5, around 2.5 to 3%. Then he'll start lowering the Fed rate. Of course, the Fed rate was lowered third quarter last year. So we did see that. We did see the fruit of that last year.
Mm-hmm.
But what we're talking about is looking at the way that now keeping this Fed rate high, how the cost of goods are still high, and in certain states higher than others. And so one thing we're talking about is comparison. So Joe, let's talk about gas. So what were you
Yeah.
seeing at the pump, man? Like in California, I'm looking at filling my Tundra. I love the thing, but oh my
Oh
goodness,
man, dude, I'm afraid for you, dude. That's tough.
the big
I
green
mean, yeah,
machine is hungry, dude. So yeah, what did you see when you're out here, brother? And compare it to where you are, compare it to Nevada.
yeah. So just kind of a comparison. So coming from Vermont, we hover 240 to 280 at the most.
Oh,
I'm pretty close to upstate New York as well. Tends to hover around 3 to 330 there. So
okay.
just a little base point. When I went out to Los Angeles, the first time I filled up the car, I think was about 470, around there
Yeah,
approximately.
yeah,
A little bit of a, I was like, oh man, I wish I saved up a little more had I known. And then, like you said, we did a trip to Vegas, and I just, I had to fill up while we were out there. And when I saw the price compared to what I had just filled up with in LA, I was like,
yeah.
I'm gonna go pick up a gas container and fill up a couple and just bring it back to LA with me. Maybe start selling, selling some of it on the side or something. Because I think I paid like 330,
Dang, you could be slinging
and
gas,
that's
bro.
that's like just off the strip too. This wasn't
Yeah.
like out in the outskirts of Las Vegas. This is like on the like pretty much right on the strip too. So a pretty like focal area. So
Yeah, where it's
I was
larger
just kind of
metropolitan area, there's a larger
yeah,
demand. People are not gas, you pay a
exactly.
pretty penny. Right,
You
right.
would think, but yeah, I was just kind of shocked. Neighboring, Los Angeles, you would assume it would be pretty in line
Yeah.
with what you guys are paying out there, but no, I mean,
Yeah,
just kind of it was definitely it was an eye opener.
I'm paying 479.
Wow.
And you're seeing the news headlines come out, and I'm seeing them on the gram because I share them like on my story feed, just keep the story feed going candidly. A lot of the stuff I do in the morning, I'm a social media guy, but we're told to do it. I post in the morning when I'm at the gym working at like 4, 5 a.m.
No,
I
don't be
deleted
humble.
it.
You love it, bro. You love it.
Oh no, I can't stand social media, but I try to stay off it, man. I'm just like, bro, because a lot of it's like stuff that will just make people upset, or there's just a lot of this, or it's a lot of that, and it
Sure.
kills time, dude. It's like, where's your focus? But it's funny because like it reminds me of did you ever watch It's Always Sunny in Philadelphia?
I tune into the early seasons. Yeah.
Yeah, so did you see the one where they're trying to sell like giant garbage cans of gas?
No, I didn't see that, but that's kind of like what I wanted to do. Like, go start filling up little baggies and just be like, "Hey, I got gas."
Yeah, they
I got
brought it into their bar and they're trying to sell gas, dude. They're like, this is gonna be worth money someday. Like,
now. I mean, apparently they're like the Simpsons, where they're just very predictive. I mean, they're pretty on point with that. I mean, that
I
would have been the
love
right idea.
I love that entire cast, dude. Caitlin Olsen's still one of my favorites of all time, dude. The Mix should have never been canceled. That was one of the greatest television shows of all time.
They're
And then
on
High
like,
Potential. Huh?
oh, I was just, I think they're like, aren't they going on season 17 now?
For what?
Something crazy like that for It's Always
It's
Sunny.
Always Sunny? I think so, yeah. I mean, we used to
Yeah.
watch it all the time. Usually, for some reason, whenever we fly back to Hawaii, we see like on it's always on there for some reason. So I like binge watch It's Always Sunny on those 6 hour flights back to the islands, right? And it's
Yeah.
been a while since we've been back, since before our firstborn was born. But yeah, dude, I don't know. I mean, I don't pay that much attention to it. Honestly, the TV shows I watch is really what Jacqueline puts out. And this is what we're watching.
Yeah.
We started Reacher last night. Reacher is pretty cool, the first
There
episode.
you go.
Yeah, and then of course, everything Yellowstone. That's what you get for marrying a Irish country girl from freaking Sacramento, right? But yeah, it's funny, man. Like, yeah, if you haven't seen High Potential, there's a shout out. Watch High Potential with Caitlin Olsen. It's really good. And
Got it.
yeah, the Mick was amazing, by the way. And then so was AP Bio with the other guy. That thing was hilarious. I mean, he was just a rude teacher that didn't want to be.
Oh, Dennis, right?
Yeah, yeah,
He
yeah,
he plays that character like to a T.
yeah, dude, it's so
The
funny.
most snooty like actor I've ever seen.
Yeah, the guy, the old school Land Rover that was almost broken or whatever in the show, and he was just so like high horse prideful. But let's talk about like, so what's going on with interest rates? We always get this question, and luckily, I'm not gonna name it, but a big retail mortgage company, one of the biggest in the country, I think number two, not to pinpoint who it is, but we actually beat them in interest rates despite all this going on. And it's really working with, I think, finding out where people want to be, where things are, and thinking outside the box. So what we did was for a purchase of a property, it's an investment property, we knocked this guy into something in the high 6% range when everybody else was quoting 7.25, 7.5. It was a conventional loan limit. However, there's an investor that was buying that money on what we call a secondary market to make sure that we got him a better interest rate. And we've been doing it quite a bit. It's just finding a way to get people better rates and better pricing. We're starting to see jumbo rates a little bit better priced than conventional. And it goes back to the bond market, what we're seeing with bonds. So if you see something Fannie Freddie, you're going to see a little bit higher of an interest rate because it's going to follow that bond market. Even though FHFA is screaming at Jerome Powell for him to resign, we're starting to see that. And going back to that resignation of Jerome Powell, to go back there, we're seeing almost in a sense, and this is my opinion. And of course, if you want to comment, yell at me, scream, troll me, please don't. I'm a sensitive guy.
Just be
No,
polite. He's sensitive, guys. Come on, just
yeah, despite the tattoos, the little ushers and shaved head, I'm actually a guy that is like, why? No,
that's
but but what I'd say that is, you know, we want to see rates cut. And we talked about Big Bad Orange Man, and we talked about Powell. And this goes beyond just that little war, candidly. If you want to know, Powell was actually helped appointed by the previous administration. So the same Big Bad Orange Man appointed him, or helped appoint him, should I say? But they're asking him to resign, and there's a whole battle. And the reason why is Jerome Powell said a couple of years ago that if we see treasuries come back to this figure, we're going to bring that rate down a bit. And I think what that rate is doing is causing an overall cost to borrow funds. And talking about gas, when you see gas and you see retailers and you see production and you see shipping, the price that you're paying for an average day of or a gallon of milk, where do you think it comes from? It has to be shipped in somewhere. How are they marking that money? Well, the return that they have from what the banks are offering on this Fed rate is essentially shifting that. So not only would it help interest rates, but it would help cool inflation, in my opinion, and perhaps treasuries, which means we could see the treasuries break below 4% if we got what most people anticipate. And this is Bill Bolt at FHFA. He had mentioned this. If we hit a market or 100 basis point cut in the Fed rate, we could see the 10-year treasury break 4%, and it would be almost a likely response, which would then mean interest rates for mortgages will go back to the low six. For your government loans, you're in the 5% range. All those things could basically come together. And then, of course, you're going to see cheaper items as well. So that means money they're spending at the grocery store. Money that you're spending for a gallon of milk. If you're buying a burrito like me, I mean, my cheat meal is always tacos or going to the taco shop, right? That's my jam. That $20 taco burrito that used to be $5, 20
oh man.
some odd years ago to date me, San Diego State, Aztecs, but it was $5 for a Cali burrito. Now they're 20. Tacos, dollar a taco. They're $5 a taco. Number that we saw, just to give another number out, I saw a report coming out, and I wish I could find the headline. I could probably Google it, but just to be fair with our time, we saw the same buying power of $100,000. I don't know, Joe, if you saw this in 2020, $100,000 buying power is now
Yeah,
125.
130, oh, 125. Okay, I thought it was a little more, but yeah, that's That's crazy, dude.
What'd you
And
hear?
I thought I saw it was like 134 or something like that. But I mean, pretty much, 10,000 off. So I mean, yeah,
Dude,
pretty
let's do
close.
that. 134. That's how
Either way,
bad it is.
yeah, it's either way, it's not good.
Yeah, I think my post was from CNN. Yours is probably from Fox News. But I mean, so
MSNBC.
yeah, exactly, right. It was something that Rachel Maddow posted. But it's just funny. It's weird because that's the market we're in, and people are wondering when interest rates could come down. And I was actually on a podcast yesterday, and we were talking about this. Was it is, and I said this for last year: red light, green light. We've seen this, 22 to get into 23. You're pushing to 24. You're pushing down. We're in 25. Right? Oh Lord help! And you're going more vertical than just God help than anything
Yeah.
else. I think. But what we're seeing, which is really interesting, is red light, green light. Rates hit 7%, stop.
Yep.
At 6%, everybody's in the mix, right? We saw that a little bit. We saw rates come down a little bit for just a hair. And then, of course, what did we see? Like, even the start of this month. I mean, candidly, you and I, we pull about 30 to 50 applications a month, right? We got 18 applications in 5 days.
Yeah.
That
Just from
last
that.
week of June. Yeah.
Yep.
Red light, green light, dude. And then
And now
there's
we're at the red light. Now it's a
it's
little
like
it's come down a little bit, but or maybe yellow light.
it's yellow. It's
Yeah.
I mean, we're awesome, bro. Come on. No, just
Oh,
kidding.
I know, but we're definitely
We're humble.
at a yeah, exactly. Big humble guys. So
Yeah. No, it's funny. It's interesting right now. We're starting to see a lot of that. So that in perspective, I wanted to do this more monthly, just talk about some of the stuff we've seen. Condos are hard, dude. Do you want to
yeah.
talk about that at all, man? What you're seeing with condos?
Yeah, I mean condos, I think we've kind of had to reshape the way that we approach condos, whereas typically in the past, I feel like condos were doable in a fairly short time frame consistent with where we typically are for transactions. Maybe not, 14 days. We've been
Yeah.
able to do some, but now it's like every condo you have pushback. There's something, because every condo you have to go through that condo review, whether it's a full review, a limited review.
Yeah.
And on a lot of the limited reviews, you're pretty much doing a full review anyway.
Yeah. Yeah.
And that takes time. It's a lot of homeowners associations obviously are managed through these management companies, and to get in contact with them, they have to go back to the HOA. So you're basically going through the messenger, and it takes time.
Yeah.
Just to maybe answer a few questions or maybe get some inspection reports or find out that maybe some inspections weren't done. And it's a lot of time spent. And that is really a holdup that we've been seeing lately.
Yeah, man.
Now, I think we've been able to get around a lot of those and, work through them. But yeah, I think just going forward with condos, something to keep in mind is, if you're looking at buying a condo, just something to keep in mind is that are you going to be able to sell it in the future? And not trying to, scare anybody away from condos, but definitely just something to kind of keep in mind is that we're definitely seeing it's harder to sell condos right now.
Yeah. I mean,
Or at least get financing for condos to
well,
sell them.
it's yeah, and that's your cash buyer. So I mean, my wife and I always kind of think about like, hey, should we buy? Because we have, as you know, a few rental properties. We always talk about buying in Hawaii, and if we're to buy a like something that'd be ours that we go back to every 6 months or so. But if we would
That'd be awesome.
yeah, in Maui, right? But they have like all these restrictions because you have leasehold properties on most of them if you're by beachfront because of what goes on with the county, specifically in Maui. But then they have these requirements with Senate Bill 326. And what people don't understand is I explained this to her. We find a great price, right? Oh, things 200K. I'm like, yeah, you're gonna have to buy cash. I don't want to spend 200K right now. And it's just like on because the market is with condos hard. And
Yeah.
the upkeep and everything else. Anyhow, you're starting to see this because now condos are sitting on the market, days of market's increasing, but the ability to finance them is becoming more difficult. We
Right.
had two last month that were super gnarly. One of which was with actually I think both changed property management companies. Like, I'm new to
Yeah.
this, I don't know what I'm doing. And I'm
We
like, oh, okay. You
we
know you're
had
going,
one we
but
just
yeah.
did. We had one that we just not didn't mean to interrupt you that we
No,
had
go.
done a couple months prior. We had a property that it was difficult. And then we're ready to get going on this one. We're like, we've done it before, we'll do it again. And then come
Yeah.
to find out it's a whole new management company. So you're basically starting from scratch with all the contacts that you previously have and whole
Yeah.
new relationship.
Yeah.
And this one was a little more antiquated, whereas previously you could just send a pay via credit card for whatever you need. This one, it's, pay by check or drop off a check and it takes time.
Yeah, man. I mean, and that's the hardest part right there is like, and you have to, yeah, drop off and check. I know exactly the company. It was in Runner Park. I'm not going to name them, but they're pretty gnarly, and they were 10 years ago too, even when things weren't so hard. I don't know why
Yeah.
everybody just goes there. Maybe it's cost. Like, oh, it's cheaper. We could cut corners here
Right.
because insurance is going up, and that's another thing. Insurance is going up, so people are
Yeah.
finding it unaffordable to buy a property. right? Because California Fair Plan and just simply forest management in the state caused so many wildfires over the years. So what's funny is we see that then, and then we see these condos with SB 326, which requires a inspection every 7 years. I was just like, dude, this one and then that other one where is a beautiful property, like a gorgeous waterfront property in Sausalito, which is just on the other side
Oh,
of the
yeah.
Golden Gate Bridge. Great client, right? And great team that we work with often. We turned that thing around, right, bro? What we need to do is like just flip it FHA because it's grandfathered in the FHA system. So here's a trick. Anybody listening, loan officers, you included, if you have an FHA approved condo, just go FHA. I know
Yeah.
the mortgage insurance is there. I know there's a funding fee, but if you're writing something, a conventional loan, and they don't have that SB 326 updated, then don't touch it. And for agents, if you don't know anything about Senate Bill 326 and you're completely unaware, I sent an email to our entire database of agents and partners just so they're aware of what you need to know before you take on the listing. And I think that's the biggest step for agents in this market. Understand the market you're in, understand the changes, and update your sellers, making sure that they're aware of these things because we walked into this and it was like, I mean, I'm gonna watch my language, but it was a storm. There's a word before
Yeah.
that. Right? It was just like
It was a perfect storm, if you will. There we go.
no, my word was an S word.
Oh, okay. I'm trying to,
Yeah, yeah, and I got a 3-year-old and 1-year-old at home, so I'm
but it,
and trying
yeah,
to be a good Christian and not swear so dang much. But yeah, it was. Oh my
it was tough.
gosh, yeah, bro. Oh my god.
But then once we went FHA, it was as smooth as butter. If we could have had the foresight to have approached it from that, you know, perspective in the beginning, I think it would have saved everybody a lot of you know, anxiety.
Bro, I think that's what we should have done.
Yeah.
And I think that's what, we actually, so if you don't do this with your team, guys, look at the things that you did right, things that you could do wrong, the things that you could do better. We actually had a chance to talk about, hey, we call it, we stole it from Tim Brahim and Loan Atlas, but the perfect loan process. And
Yep.
what we want to do is, what did we do right? What could we do wrong? What could we do to protect ourselves for the next time, protect our clients and making sure it's just a seamless transaction? That was one of the
Yeah.
things. Be realistic. Look at it first. If we know to cut it loose and like, bro, this can't work this way, just be, hey, we're trying like crazy. This isn't really getting us anywhere. It's been 2, 3 weeks fighting with this HOA to get stuff. We close everything in 14 days. Bro, this is what we have to do. We flipped
Yeah.
it FHA. Long story short, we closed that thing in like 4 days.
Yeah.
I'm not kidding. It was like, even with the FHA appraisal, we got an appraisal back. Everything else, 4 days.
Yeah. We didn't even have an appraisal done previously. We had a property inspection waiver.
Yeah, which means we need an appraisal, right? So
Yeah.
for this, I don't know. It's just basically automated appraisal that gets done within the file if there's enough comparable cells to match it up. We
Yep.
flipped it FHA. We ordered it on the Friday. We got that appraisal back Monday morning. We got the underwriter to clear to close file Monday, docs them out Tuesday for a Wednesday morning signing. And then our client, who's amazing, enjoyed a week and a half in Costa Rica for the 4th of July. So it's also 4th of July week. Um, that's one of those things where you're like, bro, the stars just aligned. It's
Yeah.
just like,
No kidding.
it's cool. That said, we're watching rates. We have a bunch of people set up on our strike rate system that we watch. We have around 150 some odd clients that we're watching. Interest rates, if you're curious where they're going, we don't know. I do think they will come down. Most forecasts say by the end of the year. We got to see what happens with this Powell thing, though. And I think going back to that, that's another thing to consider. Joe, what are your thoughts on everything that you're seeing, man? Kind of what are you hearing from clients transparently? What's going on in your world, bro?
Yeah. I mean, we've been dealing with a lot of non or QM loans lately. So the rates tend to be a little higher on those. So it is a
Yeah,
little bit of a shock
yeah,
when they do get that, that first rate quote, right? But when you kind of just explain to them and then also you give them a comparison of where conventional rates are, you really see that's not that far off.
right,
But yeah, just for like going back to some of our conventional FHA deals, yeah, kind of like what you were saying, we are seeing, low sevens on a good week, maybe mid to high sixes, right?
yeah,
And I think people are kind of coming around to the idea that that's where we're at right now. I don't
right,
think a lot of people are, like in the beginning of the year, we had a lot of people looking for, low fives or even mid fives. And it's like, hey, we're just not where we're at. You know what I mean? I don't know when
yeah,
we're going to be back there if anytime soon.
yeah,
We'll monitor it, but
yeah.
I think people are kind of getting used to the idea of that this is kind of the norm for now until things come back down.
Right,
Seeing that a
100%.
lot more. People are getting more comfortable with the idea.
I think that's the biggest thing is like just knowing your comfort. One thing we push people to is, there's this 2-1 buy down product that a lot of people are really like, what's that? And I mean, I'm not going to knock it. I think there's some fruit to it. Well, actually, we actually have a version of this 2-1 buy down product that will actually pay the cost of the buy down on behalf of the client. So we can get them there. So let's say rates are 7%, year 1's 5, year 2, 6, year 3, 7. Good to know. What? if you're used to that 5% and
Mhm.
then it goes to 6 and you're like, oh, bro, that payment.
Yeah, you got to
And
have an
so
exit strategy.
if you know about insurance in California, insurance is just, I mean, we love the state. It's the reason why I personally haven't left. Although Vermont and an acre, 10, 20, whatever you have, horses, chickens,
Boredom.
goats,
I will say, I
sheep.
as I miss it. We did more when the short week that we were in California and Las Vegas than I've done since I've moved to Vermont.
Yeah. And if
And
you're
that's not a
here,
knock on Vermont, just different lifestyles, different pace of
yeah.
living.
But then you got rivers, hiking, mountain biking, right? You have that fall
Yeah.
foliage, which is like unheard of.
Oh, that right there will always keep me. I mean, yeah,
Yeah, I mean, but if you're here,
unmatched.
you'd be cruising with me and Jacqueline to see George Strait and Chris Stapleton this weekend.
That is
But
true.
and then seeing the 49ers play the Rams in October.
I'm
But
good. I'm good.
but yeah, I mean, if it's the Panthers, right? But no one watches the Panthers. So no one really cares. But
Hey now, I'm gonna go. I think I'm gonna go try to see them. They're coming to MetLife to play the Jets.
oh, bro, you
Speaking
gotta
of
go.
things that speaking of things that no one wants to see, but so I'm gonna try to make it out to that. It's only a couple hours.
Who's starting quarterback for the Jets now? Do you know?
Justin Fields.
That's right.
So we'll see. Should be interesting.
Yeah, yeah, yeah. I mean, one of them will win, right?
Someone's got. I mean, it could end in a tie. So we'll see. I can't even say with full assurance that one of them will win.
All right, here's the bet right now, and you guys can bear witness this. I bet $50. It's gosh, this could be 3-6.
Three to okay, man. Come on, man. I mean, I think you're putting too much stock into it being that close of a game.
I mean,
We'll
field
see.
goals, dude. The 49ers did it for like 8 seasons when they had Mike Nolan to Mike Singletary to like Mike Martz coming in to help out before Harbaugh came in.
Dude,
I think
those
the sleepers to watch the Chargers, bro. The Chargers, I think with the Chargers with Harbaugh. Oh, that's good.
yeah.
I mean, Harbaugh is a football coach, dude.
He just unlocks potential that that team was already pretty solid, and look what he did in 1 year. So
Dude, he's literally a hero. As far
too
as
bad they don't
coaches
have any
go,
fans.
they didn't move. They didn't really have any anyway. They had a lot
I
of
know.
bandwagon fans, right? But yeah, 100%. We could go on this forever. But all right, man. So yeah, it's I forgot what we're talking about. Oh, just telling people budget wise in
Yes.
California. I have a budget. Anybody wants it, just shoot me an email, shoot me a note, visit my link in the bio, whatever. I'm gonna send it to you, free, no cost. You don't have to be working with me. I really don't care. You want to share it with your clients and you're a loan guy, share it with your clients. It's more important to make sure, yeah, cool, high five. You can afford 2, 3 million. If you're cool, 500K, focus on that. Focus on
Yep.
those monthly payments. We do think rates will come down. We just don't know when. And if you're one of those folks, I got into property on this podcast yesterday, actually came out as well. But they're talking about these builders, not the knock builders, because I worked with builders for years, but they buy down that rate. A lot of times, temporary buy down to get them that rate at 4% first year,
Yep.
5, 6, right? But they get used to that payment. Then the next second year comes around, and they're like, I can't make these payments.
It's a jump.
We had a client that did that. The agent really pushed him in this 2-1 buy down. We had two of them,
Yeah.
in fact, and
Two.
we
Yeah, I was
actually,
gonna say.
yeah, and it was by the same agent,
And
candidly.
it when it was kind of like like the doomsday clock. It was like we need to get it before that date hits and that payment switches because it's like taxes shot up, insurance shot up, and it was just like it was what storm. You know what I mean?
Yeah,
Just trying. So it was a little
yeah,
scary. I mean, we were able to get it resolved, but
a solid storm.
it was a
Solid has a
solid
different word.
storm.
Solid storm.
But
Yeah.
it's one of those things where you really have to have it. You have to look a year in advance. What does that payment look like? If things increase outside of your mortgage payment, can you afford that? Are you
Yeah.
comfortable with it?
Yeah.
And I think so. If then it's a great tool.
And the problem with a lot of
But
loan officers, not to knock all you guys in this industry, you guys want a job or a two-person team, we might get another guy. I was talking to Joe about that. So just take this as maybe a coach footnote, please. But what I'd tell you is, and this is serious, call your clients, bro. All the time. Follow up with them, check in with them, let them know after closing you're still there. If you need anything, any questions come up, if there's anything that surfaces that you can help them with, be there. That could be a refinance opportunity for you when the strike rate
yeah,
happens, right? When those rates come down even. But that's what we do. And it's so important because these two clients, we love both clients. We have really good relationships with both
yeah,
clients, and that we like to cater to our clients and have that raving fan client, because at the end of the day, we don't spend money on Zillow or Realtor.com or anything. So if we have in the past, but really we're by referral, and it's like you take care of those people. Those are the best. That's the best network. You're worried about what's going on in this industry, right? If that's one of you listening to this, eh, take care of your clients, call them, check in, be responsive. If they need something, answer the question, text them back, call them back. Don't just ghost them. And when those rates go up, like, dude, all right, yeah, they're going to go up soon. Let's watch this for you. This is what we can do. Find a better financial because your job is to manage their debt and help them. At the end of the day, that's what you're called to do. And and be realistic with your clients. I really don't care if the agent's saying, "Oh no, I want to get them to a million, million one." If they're comfortable at 800K, for example, talk about 800K. Push that.
Yeah.
If they're saying, oh, they want to go to five and they're really only good to a 300,000, you got to talk about that 300,000. You got to really push that in there. One of my email that we go out when we get pre-approved is even that you're approved to this amount, but your comfort level is here. And then we
Right.
give them a full analysis so they can see exactly what that looks like, go over it with them and go over their budget with them so that they're aware of what things look like. Because at the end of the day, you got to fit that pocket. You got to make sure they're comfortable. Because a housing payment, get them in trouble. If they don't make those payments, some folks don't know this, but if you miss a mortgage payment, your 700 credit score turns into 550 overnight. You
Yeah.
miss two, you're going lower. You go into foreclosure, your credit ruins for like 3 to 4 years. I'm not kidding. And then maybe you could buy a house after that. But foreclosure will be something harmful on somebody's credit. Same with the short sale. And we hear about all these people doing modifications because what builder lenders had done. And, the builder lenders out there, just call your clients, like call them, just walk them through it, help them. At the end of the day, if you're a builder lender, chances are you're not going to be a builder lender forever. And if you want to stick around this industry, just take care of people so that they could call on you in the future and say, "Oh yeah, that builder lender bro, awesome. Yeah, you got to work with this guy, right?" And then he could go off and do his own thing, whatever. He could come work at American Pacific Mortgage. I don't care. CMG, any other company, do it. But that's what's really going to set you apart. That's what's going to develop your database. That way you don't have to worry about being a builder lender for the rest of your career. Because quite honestly, I did it for years. I'm not knocking it, but it's one of those things that I think is just wise to be aware of, right? All right, sorry for my tangent. I'm gonna get off my
No,
soapbox.
that being said, like there's nothing more I get excited when we do get a refinance or a client that we've worked with in the past. Maybe we did their purchase.
Yeah,
Like someone we're working with now on their third purchase I think we've done for them. And just that, that rapport you have with them was just like, hey guys, I'm excited to work with you again. And you kind of already have their personality fleshed out and you can kind of
yeah.
joke with them. And it creates such
And
a
they
good
make fun of me
environment.
and how I talk. Love
Yeah, exactly.
that. As Mike would say, let's get this show on the road or whatever he said.
Right. They start quoting the loan officer.
Yeah.
It's like, wait, is that me?
Yeah, let's rock this thing. Yeah, it's so funny. Yeah, I asked Joe the other day. That was a funny thing. Like, was he mimicking me, bro? He's like, he was totally
Yeah,
mimicking me.
100%. That was 100% ironic. But yeah, it's just I love that feeling when, that reworking that, previous clientele,
Yeah,
getting to
man.
work with them again. So
It's the biggest blessing in the world is work with clients and people you love, man. I mean, and
yeah.
that's like why I love what we do. And I always talk about other things. I've talked to you about that even candidly. And it's like I just feel like we're blessed to do what we do, help people in the way that we help them into the
Yeah.
properties and it kind of, help build for a lot of them, a whole rental portfolio of passive income, like this client now. But and this is like the fifth one, but you've been on three of them now, because you've been with me for 5 years. But it's so funny because we've been able to build that. We've been able to develop relationships. And it's just like relationships you wouldn't have had otherwise, and you're helping them achieve their goals. At the end of the day,
Yeah.
bro, there's no better thing. And then everything else comes. And then, they tell their friends about your family, sure. But
Right.
like just taking care of that person, it's everything, man. It really is. So yeah, on that note, let's go take care of people, bro. Anything you want to say before you part ways, Joe?
Yeah. No, let's hope for rates to come down sooner than later. Hopefully it doesn't take till the end of the year. We'll see what happens. But yeah, if you guys need anything, definitely feel free to reach out if you have any questions. Mike's here as a resource. I'm also here as well. If it's something I can't help with, I'll defer to Mike.
Yeah, and Joe's amazing, by the way. I can't read my
I
reviews
try.
online. Everybody talks about Joe now. I even talked about him.
He's
Mike's
still in
cool
there. It's cool. I
though.
noticed it went from Belfour team to Mike and Joe. That was when I was like, all right, we're on to something here.
But we used to have. I mean, we had a much larger team
We did
back
have
in
a
the
big
day.
team,
Yeah,
but no,
yeah.
even just like even last year, once it was just the Mike and Joe team, it was, once it went from Belfour team to Mike and Joe, I was like, oh, that's cool.
The tag team, bro. Tag
Yeah,
team. I'm gonna get some old school WWF championship belts, like the tag team ones, dude.
there we go.
That'd be sick. All right.
Yeah, man,
On
do
that
it.
note, y'all have a blessed day. Joe, thank you so much for taking the time. We're gonna do
Yeah,
more of these. I promise. I promise not to be like Dom Mazzetti at Bro Science, where he does one every who knows. But we got to be more. affluent with this. If there's anything that you guys want us to chat about, just shoot me a message too. Love to share stuff, dude. But definitely, thank you again.
Yeah.